Yeah, it's your boy Crypto Blood, and welcome to another double spending episode. I had to do one. It's Sunday evening, and I just came across this video from Glenn Beck from his radio show, just a snippet of it. And it was really profound because I normally don't even watch Glenn Beck. Didn't even know he had a channel on YouTube. But this was pretty profound because it was just talking about the repo markets. And this was shot, I think, on Thursday. He recorded this. At that point, the Fed had done 4 injections into the repo markets. Many of you know it ended up doing one Friday as well. So a total of 5 consecutive days of repo injections or liquidity injections into the repo markets. Crazy. This is the same thing that went down in 2008 when we had the meltdown and things were starting to tighten up in the credit markets. We're experiencing that same thing now. And surprisingly enough, or maybe not, this is a chart from Bloomberg Terminal, just to give you a comparison. Look at this chart. This is a chart of the repo markets. And as you see, that previous high was in 2008 when we started having the issues. Guess what? This Monday, or this past Monday, September 16th, you see the rates skyrocketed even further than the highest peak in 2008. So that should just give you some understanding and some context as to what is really going on. But there's a huge disconnect. Mainstream media, everyday people, they don't know what's going on. They don't care. You know, they have no clue what's going on in these markets. And it's just really sad. It just shows you how disconnected our society is to what's really going on and how our wealth is being stolen every day. And so we're going to get into this video. Check it out. Leave your comments and questions below and let's have that discussion. But this is crazy. Good stuff from Glenn Beck on this one. He really went in on him. Check it out. Holla.
So I told you yesterday about Repo Madness, what was happening in the banking community. And if you paid attention yesterday on what was, what we were talking about and what was happening, there was a problem at the banks where they have this overnight lending system. And all of the banks have to have a certain amount of cash on hand. And they do this every night. They look and say, how much money do we have in the bank? You know what? Call Citibank and ask them if we can borrow, $10 billion. We'll sell them this and we'll buy it back tomorrow morning. Happens all the time. Banks loan each other money all the time. Now, back in 2008, Bear Stearns started asking for money. And the other banks were like, now you're asking for an awful lot of money. I'm not really sure you're too healthy. And so they started going to what was called the discount window, where they could go to the Fed in the middle of the night. But nobody wanted to go to the discount window because the discount window was it was the walk of shame. If you went to that window, the other banks would know that you were in trouble. So Bear Stearns went to the discount window, and the Fed said, "Okay, we'll write you some cash, okay, just to keep them afloat, just to keep everything going. But don't worry, nothing to see here, nothing to see here." As the crash started to happen, there was a credit crunch, not with you. The banks, everything seemed normal, kind of like, right now, where everything seemed normal. But at night, the banks were in full-fledged panic because they had to have a certain amount of money in the bank every night to cover everything. And what normally goes on is Bank of America will call Citibank, or Citibank will call JP Morgan Chase or whatever, and they'll work it out. And they say, hey, can you just transfer some of your money, and I'm going to transfer this asset over to you, and then tomorrow we'll reverse that. Not a problem. Until every bank in 2008 was freaking out because none of them had enough money to cover their expenses. And the first sign of trouble is the overnight interest rate, which should be 1.75. The overnight interest rate, when the bank goes and says, hey, I want to buy a new house. Except what they're really saying is, hey, I don't have enough money in my vault to cover the stuff that I just bought. Can I borrow some money for the overnight? And the banks say, sure, 1.75. The credit crunch became so bad as of Monday that the interest rate that the banks were selling each other these loans for the overnight was 10%. Imagine you borrow $10 billion from another bank in the overnight and you have to pay 10% on that money. That's not going to go well or last long. And the reason why it was 10% was because no one had enough money. They were all calling each other. Hey, could you loan me some money? I don't know. I can't. Of course, I'll find it if you pay me 10% in the morning. That's what was happening. So the Federal Reserve knew this. And so they just casually made an announcement. Hey, nothing to see here, nothing to worry about, but we're going to loan $55 billion to the banks tonight. And we're just going to do it tonight. Well, it came back that the banks needed $65 billion for the night. Then the next night, the Fed decided to do it again, and so they offered $65 billion. Well, they needed $75 billion. Every time they opened the, quote, discount window, every time they made these purchases of assets. By the way, they're not paying them back the next day. They're just buying these assets. Every time they did that, they needed more. So they kept doing it. Remember, this is only going to happen Monday night. They did it again last night. They've done it Monday night, Tuesday night, Wednesday night, Thursday night, and they're going to do it again tonight. So that's where we were. That's what I told you yesterday. This is so critically important that you pay attention. So where are we? Well, the $75 billion per day from the Fed extended last night into day 4. We are now at $350 billion that has been injected into the U.S. investment banks in 4 days. And the banks are still asking for more. The markets are not functioning. If the banks need $75 billion a day in new cash just for their day-to-day operations, J.P. Morgan Chase has taken $52 billion in cash and new capital from the Fed in 3 days. That is 22% of what the entire company is worth. That's their market cap, 22%. And they borrowed that cash or took that cash in 3 days. The world's largest investment bank needing $12.5 billion every day in newly printed cash from the Fed to provide cash on the books. In 2007, the initial bid from Lehman Brothers was $620 million. 6 days later, a 120-year-old company, 11,200 employees, 8.9 million investors, worth $14 billion in market cap, was gone. We have a problem here. We have a real problem. In 4 days, they have given out almost half of what we argued about. We argued all week long, that week when we had to rush this through. It was the thing that caused the Tea Party really to stand up. Wait a minute, you're bailing these banks out. What about everybody else? They're doing it now quietly, and they've already spent half of the cash that they spent for TARP. And they did that in 4 days. And no one is talking about it. There is a real problem with the banks. We're not talking just Lehman Brothers now. We are talking all of the banks. But wait, let's talk about blackface. Wait, there's rain in Houston. You know, it's climate hysteria day. We've got to get Trump's tax returns in California. Oh, we've got to get all of the ARs back. Don't you even say that we're talking about confiscating ARs. We're not talking about that. Yes, you are. No, you're not. Yes, you are. No, you aren't. Meanwhile, the banks are in trouble. Are you awake? But those banks put you as the last person to get their money. If you have money on deposit at a bank, because when we did TARP, they did something else. They changed you from one of the first people to get paid. So you can go in and George Bailey can say, wait a minute, your money is here and your money is here. I want $282. You can't get your money with the banks. You're the last one to get paid. Now, you'll get it through the FDIC, which will mean more printed money. Nobody is talking to you about the stock market is doing well only because that's the place we see inflation, because the only people that have the money are these banks and others that can get the free cash. They're people like the sovereign funds because they are counting on America. It's the only place they can get a return on their money. And so they're counting on America. And they're putting all of that money into our stock market. And everybody is buying their stuff back because, why? They have the money. Your money is in the stock market. Your money is in bonds. Your money is in banks. If we go through another banking collapse, socialism will be in our future, our very near future. America will change overnight, and those who say they are against socialism today will be for socialism tomorrow. All of our politicians will not want to be remembered as Herbert Hoover. They will all want to be FDR. And they will say it's just temporary, but it will not be temporary.
Wait, they want to be like the guy who extended the Depression for 12 years?
Yes.
They want to be like him?
Yeah. Yes.
Okay.
Yes. Yes, they will.
Is that amazing that they want to be like that guy?
You need your money in a local credit union. You need your money in a local bank. You need your money in a local bank that is not affiliated with these big banks.
There you go, guys. Profound words from Glenn Beck. True words from Glenn Beck. Hope you guys enjoyed that, and leave your comments in the section below regarding this one point he talked about. Do you think we will fall into socialism if this financial structure, this system falls? I think so. I really do. We already see that coming from the Democratic side. A lot of their ideas and stuff are very left-wing socialist. And I did a video last week talking about Richard Wolff and his critiques of capitalism, and I agree with a lot of what he was talking about, but that doesn't mean I agree wholeheartedly with socialism. I don't think that is the necessary path for us, but that's probably the path we will take, because people will be so fed up and things will be so messed up that they'll run to the next thing. People will flee to the next thing because they will see capitalism, or I say crony capitalism, has failed them. But again, leave your comments in the section below. We'll have that discussion. That's the double spin for today. It's your boy Crypto Blood. I'm out of here. Holla!